Welcome to MarketSnap's daily market rundown. The AI trade is starting to crack, and not everyone is going to be a winner. While the broader market posted a quiet green day, the real story was a brutal rotation out of the very names that led the rally. We're breaking down the winners, the losers, and the massive signal from the chip space. The major averages all finished in the green, but it was a grind. The Dow added about 150 points, the S&P 500 gained 0.38%, and the Nasdaq outperformed with a 0.62% rise. The VIX, the market's fear gauge, dropped over 5% to 15.67, suggesting a bit of calm returned after a volatile few days. The big story today was a massive rotation into mega-cap tech. Apple surged 4% after announcing its AI partnership with Alibaba to power Apple Intelligence in China. That news also sent Alibaba's U.S.-listed shares up nearly 5%. Alphabet jumped 3.6% after Warren Buffett publicly admitted he should have bought the stock years ago, confirming Berkshire's position. BlackRock hit a new high after assets under management blew past $15 trillion, sending the stock up over 6%. But the flip side of that rotation was brutal. The AI infrastructure and memory trade got absolutely hammered. Micron, Dell, and Western Digital all fell between 8% and 10%. This wasn't a small dip. This was a coordinated sell-off. The fear is that the massive capital spending cycle might be peaking, and investors are starting to question the return on that investment. Zooming out to the weekly picture, the winners list tells a clear story. Vodafone is up 19% on the week, but more importantly, cybersecurity names like CrowdStrike and Palo Alto Networks are up over 10%. This is a sign that the market is looking for value and defensibility beyond the pure AI infrastructure plays. On the flip side, the weekly losers list is dominated by AI and tech names. IBM had its worst day on record, falling 24% after a disastrous pre-announcement. The company blamed enterprises cutting legacy IT spending to fund AI infrastructure. That's a huge red flag. Nebius Group, CoreWeave, and ARM Holdings all fell more than 11%, confirming the rotation is real. The big macro story today was inflation. The June CPI came in at 3.5% annually, a welcome cooldown driven by lower energy prices. The Producer Price Index also fell 0.3%, the first drop in almost a year. This has effectively taken a rate hike off the table for July, and New York Fed President Williams even said inflation has peaked. But don't get too comfortable. With oil prices surging again due to the Iran conflict, this relief may be temporary. Fed Chair Kevin Warsh was on the Hill today, and he made two key points. First, he said the AI build-out is not necessarily inflationary, which is a green light for continued spending. Second, he defended the Fed's independence, saying the Trump administration has not tried to influence policy. Senator Elizabeth Warren gave him a hard time over ethics, but the market's takeaway was dovish. Earnings season is in full swing, and the big banks are crushing it. Goldman Sachs delivered a blowout quarter with 39% revenue growth. Wells Fargo saw loan growth surge 12% year over year. The message from Wall Street is clear. The consumer is resilient, investment banking is booming, and the AI supercycle is generating massive fees. Looking ahead, all eyes are on TSMC tomorrow. Their earnings will be the single most important data point for the AI trade. If they guide lower, this rotation could accelerate. Netflix also reports after the close, and the stock is down 45% from its highs, so the bar is low. You can find exclusive earnings transcript summaries on MarketSnap. On a sector level, the rotation is visible. Energy is the top weekly performer, up nearly 2% as oil prices remain elevated. Basic materials and financials are also strong. The message is that the market is broadening out beyond tech. Healthcare is the worst performing sector this week, down nearly 3%. Consumer defensive is also weak. This is a market that is rewarding risk-taking in energy and finance, not hiding in defensives. Few other things to watch. The Port of Los Angeles set a cargo record in June as companies rushed to beat tariffs. New York Governor Hochul banned new hyperscale data centers for a year, which hit some related stocks. And Japan officially recognized cryptocurrency as a financial asset, which is a big step for the space. Finally, a word from the Oracle of Omaha. Warren Buffett said, "It's tough to find values when everybody is preferring gambling." That's a sobering thought from the world's greatest investor and a reminder to stay disciplined. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in. If you found this breakdown valuable, make sure to subscribe and hit the bell so you never miss a daily recap. We're also launching our exclusive SWOT analysis reports for key holdings. Check the link in the description to see how your portfolio stacks up. We'll see you tomorrow for another session.